Hello, this is Jared with the Helton Group at Loan Depot, and today we're going to be lending some knowledge about buying a home over asking price and waiving your appraisal contingency, which in today's market, that's happening more and more. The example I'm going to be giving is specific to conforming loans for someone that's putting more money down. For someone that's putting less money down, usually on government loans, FHA, VA, and USDA, that's a very individualized situation, and definitely we have to take that one by one based on the borrower's assets. But it's the spring of 2021. We have almost zero inventory and a real healthy buyer demand. So that creates some bidding wars on homes, which is creating some challenges. And sometimes you're seeing where appraisals might not meet the purchase price. So there's some options on that. So the different opinions on this, whether you should buy over asking price or not, it's really a personal opinion. You have appreciation that's going up. You got low inventory, so lots, not very many options. Your financial situation is different. The future increase in interest rates. There's a lot of reasons why you should or should not do that. But I'm seeing stuff sell for as much as 25% over asking price, which is, we all have our crazy stories, and I almost hear a new one every day. But it can definitely create some issues on the loan side of things. So how lenders work is they base your loan off the lower of your purchase price or your appraisal value. So in a more balanced market, if someone's buying a home for $400,000 and it's listed for $400,000, chances are getting an appraisal back at $400,000 is pretty high, right? Because it's been on an open market. The listing agent did a good job of listing it for the right price. The buyer's agent probably reviewed some comparable sales and make sure it's a good price for the buyer. And, overall, since they agreed upon terms, it's probably a fair price. But in today's market, something that's listed for $400 might go for $450 between the buyer and the seller. And if it appraises for $450, it doesn't matter. That's great. It all works out and everybody's happy because, it appraised for the purchase price. But if it doesn't, there's kind of some options. So the options I'll start with is that same example. So on a $450 price, if you're putting down 20%, it'd be about $90,000. But if the home appraises for $440 or $10,000 less, how's that going to impact things? So you're doing a loan for $360, putting 20% down. Now, since it's $10,000, what are your choices? So one of the options is you can reduce the loan amount, to $452 and just bring in an additional $8,000, which you're already bringing in $2,000 of that $10,000. So you only have to bring in an extra $8,000, which if you have that, that's a good way to do it. Another would be to keep the loan amount the same at $360, and instead of putting down 20%, you put down a little bit less. So your loan to value would be up to 82%. The good news is the pricing on this is a little bit better, above 80% than it is at 80. So that it's about 25 basis points in price or fee less, which is nice. So about $900 difference on that loan amount. So you could have monthly mortgage insurance, which will kind of, would be an ongoing, and you'd be able to remove that as soon as you hit a certain mark. Or you could do one-time mortgage insurance, which is single premium mortgage insurance, which is pretty popular right now. And you can also finance that in. So it really has some better options. And the third option, which is one you already negotiated away, which would be go back to the seller and ask for a lower purchase price because it only appraised for $440, but you no longer have that option because you said, hey, I'm going to pay the difference between the two. So what usually helps is I go through this scenario on the tool I use called Mortgage Coach, and it kind of shows side-by-side examples of, here's where if it appraises for $450, that's kind of the normal, and then if it's $440, if you want to bring in the extra money, or $440, you want to have whether monthly mortgage insurance or single premium mortgage insurance. So all of those work, just kind of depends on what the examples to do, but you're kind of removing the risk from the seller if you say you're going to offer it with not an appraisal contingency, which is a big difference, or pay the difference. And I think that kind of works. If you have lack of assets, some other options might be, increasing your interest rate to lowering your closing costs. It could be borrowing from your 401k. It could be a gift from a family member. It could be lots of different things. But, you just need to look at your own situation. So as always, the situation of yours, you just understand the pros and cons of each choices you're making when you're buying. But, you're kind of in a low inventory market. You're in a high appreciation and low interest rate market. So maybe buying in the short term is better than waiting on the sidelines. It's really personal. But if you know someone that has in this situation or you yourself, you can always give me a call. I'd love to help out. Even if you're with a different loan officer right now, I'll even put that in my side-by-side and kind of help you understand it. That's fine. And if you're thinking about listing your home, let me know too, because I can introduce you to some good agents that would love to list your home and create some inventory. So if you have any questions, feel free to reach out. I'll talk to you later.